And we're good.
All right, welcome back to Two Stupid Guys Trade Stocks. I'm Dylan.
And I'm Vinny.
So, go ahead.
And today we're going to talk about Dylan's portfolio.
My portfolio. So, if you watched the last video, you watched Vinny's very in-depth knowledge to each of his companies because he's a value investor. He's more long-term. Full disclosure, I don't do any of that. I'm a technical analyst and I only care about charts. I am in a couple long-term positions, but it's just because I know eventually they're going to go up because they have to, right? Stock market has to go up, right? Let's get started here. But just so you guys know, I'm a swing trader. So I don't hold positions usually more than a month. And I also partial out of my positions pretty heavily. What that means is, let's say I buy 100 shares of Carnival Cruise Line. Once it hits my initial price target, I'll sell half or 25%, and then I'll bring my stop loss, which means my fail safe, up to break even at whatever cost of the stock. And I'll explain that easier. But it just makes it so I take all emotion out of my decisions. Because if you're a technical analyst and then you get emotional, that's how you lose a lot of money. And I'll show you that on my graph. So quick recap. We showed this a little bit earlier. This is 2017. I did not always have $31,000 in here, but when you add money in Robinhood, it makes it as if the money was always there. This is actually really $300. So this is just a nightmare of mistakes and me learning. We're going to do a video on the dangers of margin. If anyone has heard of MoviePass and had that fun train, this is me doing my first trade after putting in like 10 grand because I had literally no cash right here. And then it went up. I'm like, I'm a god at this. I'll just have a couple million, I don't know, maybe next year. And then it just got insane. And then reality started to set in, and I didn't know when to sell because I had no mentor or anything. I was just trying to figure this out on my own. And what you can't see is that this is actually 9,000. I had put in 16,000 since then. So, and this was about 52. So that was real depressing. Build myself up a little bit, keep going. Corona. This is actually 11. And then I'm like, all right, I need to stop using so much margin. It's dangerous. I was fully 100% margin, meaning I had, $10,000 of my own money using $10,000 of someone else. So stocks go up twice as fast, also down twice as fast. And then I learned what a margin call is right here. And that's when they say, hey, you don't have any more money, but you're using our money. So we need our money back. That's a problem.
Do they threaten to break your knees?
Yeah, no, there's like, you got to sell your stock now. It's like, whoa, that sucks. But then here I decided I need to start being professional and taking this seriously. And then we have this beautiful, if I might say so, increase from what is actually, this is actually 11,000, but because you add money. I added money right here and it threw off all the numbers. But I'm at 106%, so that's pretty solid. But we are now going to go over how I trade. It's very different than Vinny. So on this right-hand panel of Robinhood, let's do like 3 months. I'm up like 15 grand. So on this right-hand panel, these are my current positions. CCL, that is Carnival Cruise Line. As we all know, due to the Corona pandemic, cruises weren't having that great of a time. Same with airlines. So they plummeted quite a bit, actually. So if you can see in the last year, they went from, $44. Actually, they were even higher than that up here, but $44 down to nothing, right? They've been hanging around this $15 to $18 range. And we're going to do a separate video on how I find these exact numbers, but basically I bought at 18 to sell at 24. That's the recent high. So I you could consider this a long-term position, I guess. I'm cost average at $19.71. If the stock, which is at $21 currently, drops down to my buy-in, I'm out. I'm not losing money on the trade, which is very helpful. But my equity's kind of misbalanced. I'm very high into Carnival Cruise Line because, look, cruises aren't going anywhere. Corona's a crapshoot, obviously, but they have the best balance sheet. They're set through 2023 in case something bad happens. Norwegian's crazy in debt. They're all in debt right now, but more in debt. I think RCL is the most in debt. Royal Caribbean, or no?
Yeah, I'm not sure.
I think Royal Caribbean's the most in debt, but they're the biggest one. They're like the Walmart of cruises. So this is just kind of a 25% swing from $18 to $24. I was originally in at 18. I keep on cost averaging up as it goes up. AMD. So AMD builds chips, CPUs, and GPUs. They have been killing it forever. Also, you saw on that chart, on my lifetime chart, I was invested here at AMD at $3. Really wish I held. That would have been real nice because now they're at 90. But basically, let's see here. They reported earnings, this is why I'm not a fundamentalist. They basically just killed it in every possible way. They're like, you think we're going to make this much money? No, we're making 180 million more. You think we're going to project this for the cloud? No, way more than that. We're killing it. We're also taking all of Intel's money. What happens? It goes down for some reason. I don't understand that at all.
It's one of those
the stupidest thing in the world.
Yeah, I think it was one of those, buy the rumor, sell the news kind of deals,
Yeah, well, I bought here at 90, and I'm like, all right, cool. My hard work's paying off. I'm holding until 99. No, you're not. And then I sold, and I bought back in, and I'm just going to hold until it goes to where it needs to go, because that's just the most frustrating thing.
Yeah, it's funny. I remember AMD's PE was like 120 not that long ago.
It was, yeah.
Forward PE now for AMD is what, like 30?
Is it?
It's something much more reasonable, put it that way, given how fast they're growing.
Look it up on FinViz real quick while I do the next one.
Yeah, I'll take a look.
FinViz is fantastic for looking at fundamentals of stocks. So here are my true swing trades. Okay, so I'm going to get into these. Let me show you my returns as of right now, total returns on all these. So we're all green. That's always a good time, right? The most important thing about stocks is the entry. We're going to do a whole video on that. It's also a Warren Buffett thing. Only thing we have in common. That's it.
The forward PE for AMD is 35.
Wow. That went down a lot.
Yeah, because they're actually making money now.
Yeah. So now that they're making money, let's sell it and just screw over Dylan.
No. Now the value investor folks are going to start looking at it and go like, wow, this is not that expensive for a company growing that fast.
Well, I have $20,000 riding on that decision, so let's hope that works.
There you go.
Also, if you're looking at these numbers and you're like, man, Dylan's numbers are not adding up. Oh man, what happened?
Oh boy.
Oh, I just hit options. My bad. Sorry, guys. Your equity. Sorry. If you are quick at math, you're going to realize this is more than $64,000. It's because I'm using $30,000 a margin. Account. So I have $90,981 in the market. I'm using $26,000 in margin. I do not go above this because of what you saw in my graph. I learned. Just took 4 years. So FUBU. Vinny, are you familiar with what FUBU is?
Yeah, I think they're like another streaming TV provider.
They are. They're killing it with sports, though.
Okay.
Sports is their deal because sports are harder to get. For instance, if I want to watch, I live in Arizona, but if I want to watch a Bucks game to see Tom Brady or something, it's way harder to do unless you have the NFL package, all this stuff. But
Yeah, that's
FUBU,
300 something bucks a year.
Yeah, FUBU's crazy cheap. I don't know. Can you look up their price for me? They're real low, but they IPO'd. Yeah, like I think it's like $20. They IPO'd October 8th. So then they had this huge spike. People are getting into it. What's interesting about FUBU is their short flow to 70%. For all you people who just watch the GME thing and you're like, wow, short float means something that's going to do a short squeeze. That's partially why I'm in it. FUBU has a very large short float, but I'm in at about 48. 48.86. I'm before it hits this point. Before I'm going to sell half of my shares. My stop loss right now is I think it's $46. So the way that I do things is I look at a reward ratio. I try to go at least 2 or 3 to 1. So let's see here. Explain that. So I have 200 shares. That means if I hit 46, just to make numbers easier, I'll lose $600. If it goes to my buy point, 200 times 11, I'll make $2,200. So that's more than a 3 to 1 risk. So I'm completely okay with that. As long as I'm right more than 50% of the time, I will make money. And as you can see, I'm right more than 55% of the time. So FUBU is my riskiest one on here, actually. It moves like $4 a day, and it's a little bit of a nightmare because I'm at work and we're doing stuff. So I always have a stop loss on anything that I'm not willing to hold. I'm willing to hold AMD. I'm willing to hold CCL. I'm not willing to hold these 4. Which brings me to X. This is Steel. This is one of Vinny's boys. Vinny, go ahead.
Yeah, they haven't been profitable in quite a while, though. But you never know what's coming down the pipeline. If we get this $2 trillion infrastructure package passed, that I think steel, domestic produced steel, might have an ability to become profitable for at least a period of time.
Yeah, exactly. I'm going to show you guys exactly how I find these buy points and exactly what my number is to sell. But essentially, United States Steel did a common share offering, meaning they have a certain amount of shares. Just to make it easy, let's say there's 1,000 shares available in the company. There's like billions, but let's say there's 1,000 shares. They diluted their share price by increasing the amount of shares, so they can make more money, basically, because they need money because they're broke. So my cost average is 1627. If this puppy hits 1580, 1560, because I get a little bit more room, I'm out. So the lowest I can lose is $60, and my profit margin is 400. If it not even goes there, if it just goes to 20, which I thought was reasonable for their share offering percentage. So that's 60 to 400. That's 1 to 6 reward ratio almost. So I was pretty happy with that entry. We're going to go back here. DKNG. This is a pretty fascinating one. Do you know what DKNG is, Vinny?
It's DraftKings.
DraftKings, baby.
Yeah, as far as I'm aware, it's just like something you're gonna have like weird fantasy football teams on. Like I don't understand that. I don't know anything about the business model.
I don't gamble ever, which is why me and you didn't do the GME AMC fiasco, because that's just straight gambling. However, America gambles. So
true, very true.
They have been signing all these different people to their company. Basically, what just happened. Where is it? Oh, Kathy Woods ARK Invest 620,000 shares. So a hedge fund basically went just. I can't. Can I say?
No, I wouldn't say that.
Okay. They went for it. I feel like you can say, all right, whatever. They are all in.
Yeah, all in. There you go. You can definitely say that.
There you go. And then on February 4th, they're now in Canada. That's not really important.
Yeah.
But they're expanding territories. So basically what that means is they have multiple positive catalysts. There's multiple positive things happening. So I jumped on DKNG. My cost average is 62.20. It's not where I want it. I want it at 66, but if it crashes down to $62, I'm going to sell and not lose any money. So yeah, that's always fun.
It's actually interesting. You talked about gambling a little bit. I don't know if you saw this week, but Carnival Cruise Line announced that they're going to add offshore like sports betting to their casinos. I think when they start selling again. Yeah.
Get me to 24, baby. I'm trying to unload these shares. Nice.
Yeah.
Yeah. In the negative news, Canada just canceled all cruises for like all of 2022. So that's why I actually had $30,000 in this. Now I have 25. That spooks me a little bit.
Yeah.
PLTR. So once again, I'm going to go over these buy points exactly how I find them, because there's nothing worse than buying a stock at a bad buy point and then watching it go up and down and negative and positive. It sucks. It's horrible. So cost average 32.60. I'm at 34.30. So once again, I've already made 5% on it. If I can make 5% a week on a stock, I'm very happy. So depending on what happens Monday, I'm probably going to sell half of this, just to ensure that I'm good. And I'm going to bring my stop loss back up to 32.60. It's trending real well. So we had this huge lull here, but its 3-month graph is fantastic. But basically, just for a quick cap, this would be the stop loss. It'd be 31.02. We have better graphs. I just don't want to overwhelm people. So you do not ever use a Robinhood graph to find a stop loss because they're not accurate. So, but I will show you guys that. Let's get back to Vinny went over PLTR and what it is. I don't really know what it is. I'm going to be honest with you. I'm still confused. They do something with the government and they all watch us or something. I don't care. I just want to make money. Love. I was just talking to Vinny before he hit record. I bought this Friday because the daily chart was absolutely gorgeous. If you could see, it hits almost the same price every single time, right? So I bought Robinhood sucks. I bought here, but I can't click it. I bought here, right as it hit this peak, with a stop loss 50 cents below it. So I was only risking $50. Their next, I think their next deal here is $57. I'm looking for 57. So there's a 50 cents risk for a $7 gain per share. So once again, my stop loss is going to move to break even. I don't even care what happens. I'm already at, I barely made anything on it. But it's because my cost average is here. But there's no more risk anymore. So perfect.
So you saw a company breaking out and making a new high, and that was your trigger point.
Yeah, it had hit that level and bounced 3 different times. So, fourth time's a charm, unless you bought in third time and it failed. But it's worth it. I'll lose $50. I can gain in this one 600. That's a 12-to-1 risk. It's completely. I will do that 9 times out of 10.
Nice.
I was telling Vinny this before he started. I didn't know what love was when I was doing my. I had no idea what the stock was. I just saw the letters. I saw the daily chart. And I'm like, I'm in. I did a quick search to make sure no negative things were happening. Like, the CEO didn't get caught with heroin or something. And then I found out it was Southwest. I was like, oh, okay. That works.
Yeah.
DPST. This is a 3X. I do not recommend anyone do this.
No.
Okay. This is more advanced. It's just way more risky. These are just to show you the 1-year graph. This is all right, 5-year graph. Yeah. Look at these numbers. These are just absurd. Right?
For a guy that limits his personal portfolio to 30% margin risk, he does invest in an ETF that is a 300% margin risk.
I do. Also, this is where I have 10 grand on this. Yeah, yeah.
Well, it's been playing out well recently.
It is. So that's part of the deal here with DPST. To think of it, it's just regional banks. Just don't even look at the name. That's all it is. I think what. Oh man, my Spotify just turned on. Hold on. Sorry. Was it the big East West Bank? Do you know what it is? One of the big regional banks.
No,
Yeah, their chart mirrors this really well. But basically, we're here. I bought here. I bought here as we're trying to break out here. As we hit 177, I'm going to offload half these shares, and then we're going to see what happens because I have zero faith in this stock, obviously, because it's just absurd. Also, it's important to note, if everyone's thinking, why don't you just hold on to it? Because it was at $466. If a stock is at $500 and loses 50%, that means it's at 250. And then it has to gain 200%. Or sorry, 100% to get back to 500. If you gain 50% that you lost, you're not at 500. 50% at 250 is not 250.
Yeah.
It's you'd be at 375. So I don't think this is going to come back here. And if it does, sweet. Always have some shares. And then Apple, he went over Apple a lot. They just dipped and they're just taking over the world. I do not have many shares of Apple. This is a pretty small position for me. It's only 4% of my portfolio. They dipped down here and I bought here. Did I? Yeah, I bought here. I'm completely comfortable with them going to 120. I'm not going to sell. That's why I don't have a stop loss on it. It's fine. The ones with the minus signs have stop losses. And that is my portfolio. These guys are called SPOCs. We're going to do a whole video on that. These are a dream. For instance, I spent $3,000 in premium on CCIV and I made 12 grand on it because people are just ridiculous with this whole Lucid Motors thing. We'll do an episode on that.
Yeah, they're
These
like
are
one
my
step
options.
safer than going into like cryptocurrency, basically.
Pretty much, yeah. But basically, if you find a SPOC who the guy who owns it's not a crook, and they need to go, like, this is just a call for 319 at $25, which I think that's very reasonable. I spent $200 on it. I could easily make a lot, or I'm very comfortable losing $200. I don't care. That's fine. It's totally worth it, especially after CCIV, because I bought 20 calls on that one when they were at $18. I sold them at 28 for like a 400% gain. Totally worth it. That is my portfolio. So me and Vinny are not similar in any way. Vinny, what do you think?
Yeah. That interesting. You definitely have a little bit more risk and kind of more defined holding periods and targets than I do. Really, like mine is much more kind of long-term oriented, where I just see value and I wait a few years to see if I'm right.
Yep. Also, this goes without saying, if you're doing my way, you don't sleep well a lot. We should throw that out there. Exactly. My way is way more stressful.
Yeah. I forget exactly where the quote comes from, but it's been attributed to Warren Buffett about, you should only invest in companies you feel comfortable owning if you were stuck on a desert island for 10 years.
I do not feel comfortable with almost all of these companies in 10 years.
Yeah.
No.
Most of my positions, I can honestly say I'd be okay with owning them for the next 10 years. I have fairly certain I would come back and see a significantly higher account balance than I do now. Dylan's portfolio.
We'll see. I don't know. I might get margin called during that time by 30K in margin. DPST, they can just take it off. They can just cease to exist. FUBU, exactly. I have no faith in this. This is actually, I don't like this one. I have too many shares.
It's $64.99 is for their family package, by the way. I looked it up.
That's a lot.
Yeah, I know. They're really competing with cable providers at that kind of price.
It was $64.99 for how long?
I think it's a month. A month.
A month?
Yeah. That's
not worth it at all.
119 channels, 130 plus events in 4K.
Oh, okay, actually that is worth it because Cox for the same price has got to be like 140. Cox is crazy.
Probably. I think I am paying like $170 a month for DirecTV. So
that is worth it.
I suppose.
That is worth it. And the short float, oof, it's enticing.
Yeah. I don't know. It can certainly make you rich overnight, but you have to sell at the right time to make that happen, as many of the GameStop folks learned this week.
Yeah, I have a stop loss sitting. I have no faith in leaving this for a day, like zero faith. The other ones I do have faith in. February 14th, 8 days from now, we're going to start. I'm going to throw up these picks. I have like 150 stocks that I look at. And at any time, there's only like 5 that I think are in a buy range. And that's pure technical analyst. Vinny's going to weigh in on his more longer term picks. I'm sure CCL's in there for you. Probably AMD.
At some point, AMD is definitely looking enticing.
Yeah.
They still own a very small segment of that chip market. That's for sure.
Vinny, can you go back to the screen real quick?
Yeah.
This looks better than it was. I lost $3,000 in AMD last week. That's why we were joking about it. There was a negative 3,000 at the top. 2,500, and I was very mad about it. All right, we're good.
All right, guys.
So that is my portfolio, friends. We will see you in a week with those picks. Vinny, you got anything?
No. I just by all means, drop us a comment below. Let us know if there's anything you'd like to see from us. Dylan and I are very much learning this YouTuber thing. We're also still learning about stocks, and we'd love to kind of help you guys along the way. And or if you think we're being complete and utter idiots, by all means, let us know, because we want to make things better.
I'm open to that. Yeah, I mean, it is called Two Stupid Guys Trade Stocks. I think that's in there.
Yeah, you expected that when you clicked the thumbnail.
Also, I bought LUV and I didn't know what it was. The daily chart was gorgeous. So
you've probably bet on more Southwest flights than number of shares you own at this point, I would imagine.
Oh yeah, I had to go back and forth a lot. That's true. Different story for a different time.
Yeah. All right. Well, thanks, guys.
Have a good one.
Yep. See you next week.